Hey YouTube, Jason here with DayTradingFearless. Welcome back to my channel. If you're new, welcome. Make sure you guys like and subscribe. And as always, let's jump right into it. This is the weekly watch list for September 28th of 2020. So we're kind of coming into the month end of September. October, I think, is going to be a wild month, volatility. Same with the beginning of November. But let's take a look at the S&P Emini futures. As you can see, these are things that I've drawn over the last couple weeks. We came right down. These levels are Fibonacci extensions from this leg right here. We came right to the 127.2%, came down, touched it, and had a nice little bounce. And then I'm still looking for potential downside, but maybe we do get a little bit of a bounce here. So what I would do from here now is go from this high to this low. Okay, and let's look for levels that kind of match up. We see a low volume node right here on the market profile at the 38.2%, which I think potentially could be resistance, and that's around the 33.47 levels, and then maybe get back up to the 33.92 level, which is the 50%. But on the bigger picture, think of it this way: a high, a low, a lower high, lower low. So if we can bounce, do all this, right? Do a bounce all the way up here to the 50% and then roll back over and have another leg lower, because on the overall picture, we're making higher, lower highs and lower lows. So that's kind of what's going on with the S&P E-mini futures. Let's take a look at SPY, same exact thing, right? Just for the ETF, I would draw a Fibonacci from that high to this low and then back up. We're looking, again, low volume node right around this 334, we'll call it 335 level, and then potentially all the way back up to this 339 and change, which would be the 50% level. So and that level also matches up with the prior highs. So up around the 3,400 level, a high, low, lower high, lower low, right? So we're just in a downtrend, and we'll have to see how this all plays out. Do we continue? So this coming week, I won't be surprised to see a bounce higher. With our waterfall, right, we actually broke above the prior day's high today on SPY and also the ESs. So the market's actually in a bullish phase. So I won't expect anything different. So probably more upside. We did close strong for the week on the upside, so maybe we see a follow through going into next week. And remember, our market profile, lots of stuff between the we'll call it 335 and 340 level, high volume node, maybe clean up the market profile there. As far as gold, we'll go GLD. Okay, GLD, I've kind of been drawing this for the last few weeks. I've been saying X marks the spot, potentially down here, which is also, you see some gaps, the 38% level. Volume profile, we kind of broke down from this flag. I actually thought we might go higher, but if you remember, I was saying we are in the downtrend, a high, low, lower high, right? And then we made a higher low, lower high, lower low, lower high, right? And then we kind of collapsed this week from this wedge. And so we're now still making lower highs and lower lows. So ultimately, right here, we have to break above this high of 185.25 before we're really back in an uptrend, because if we come back up, all we're doing is we're just essentially kind of retracing this down move right here. But I definitely will be looking around this 170. We'll call this, I'll probably be looking at this gap right here on GLD of the 171 level for a potential bounce. And then that's also right around the 38%. Then watch the 165 for the 50% in the 200s kind of creeping up. So maybe we'll get rid of this X right here, and we will then say this X right here marks right somewhere up around here, because this will probably take a couple days to move up. This maybe move down. X marks the spot, so maybe around the 165 levels on GLD. So something to kind of watch this coming week. Next, let's go to Apple. You know, I've been talking about Apple lately. I've been saying watch that 106 level. We kind of got right to the 106. We even flushed down to the 103. Nice bounce up to the 112. Again, we kind of have just working our way higher. If we could get above this 113, now we're going to have a low, a high, a higher low, right, with a higher high. So potential watch for a move back up. Draw our fibs from high to low right here, okay? And so we're going to be watching the 117 level to about the 121 level right here for potential resistance, and then maybe even this 125. So Apple looks bullish going into next week along with the market, bearing any news. But remember, I'm expecting volatility over the next few weeks, which means we go down and we also go up. So things to look at. Let's take a look at Tesla. Okay, and Tesla's interesting because right now we're making a high, a low, a lower high, a higher low. So you could, if you want, call this a wedge, right? If you want to look at it this way. So actually, let's draw it from here. So this is what I'm looking at. Potential bull flag. We saw the same thing kind of happen over here. Bull flag, break to the upside, bull flag, break to the upside. So a potential, maybe another move higher, maybe go retest the highs. With that being said, I would definitely draw a fib from low to high to see where levels are. But the problem with this fib, I'm not going to draw, is because we've already had the bounce. So that's irrelevant. I think if anything, it's just you need to break above this 460 to see price maybe go up to retest those highs. And then finally, let's take a look at ZM. Actually just ZM. Okay. Interesting with Zoom. I mean, Zoom's just been a monster since the whole kind of the technology rally has started, right? Lots of people are using Zoom, working from home, stuff like that. But there is divergence up here, which should be cause for concern. Also, is it really sustainable? I don't know. I think it's ran way too far, too quickly. It's way ahead of itself. But charts are telling us divergence, but we'll see. This candle broke below. Maybe this is just the kickback, kind of like what we do with the S&P Emini futures. Maybe this is the kickback and then a roll back over and start to make lower highs, lower lows because of the divergence that's going on the bigger picture. Okay. With that being said, the one thing that I would do is draw your Fibonacci extension, okay, and just go from this low to this high all the way back down. And these are going to be levels that we'll be watching in case it does make a new high. Again, if we just did a Fibonacci extension from this low to this high over here, we could see where the levels were right here, right to the 127 reverse, right? Look at this, 161, 127, kind of match up right around this 560 level, 550 at 560. So those would be levels if we do keep going higher. If this divergence does not hold, then maybe look at that. So we'll come back to that next week or two on the video watch list. But again, as always, thank you for watching. Be safe out there trading, and until next time, we'll talk to you soon.